Hey guys, Trader Worth the Risk here with the Crypto Collective, and I just wanted to give you just a really brief video on how to use and identify key levels. Now, if you're a beginner in trading and investing, one of the most important things you're going to learn is support and resistance. But you can use support and resistance if you don't know how to use it properly. It's pretty much going to be worthless to you. So the key take of this video is how to identify the key areas where price is going to react to. So we call them key levels. Now, the way you can identify a key level is because the price will actually reverse from that level, or the price will kind of stop there and take a pause before making a massive move, whether it be up or down. So I've just written it quickly out on the chart here in front of you. Key levels are points in the price action where significant reversals or swings happen and significant consolidations happen before large moves, which are forms of support and resistances. So to identify key levels, you have six basic forms of support and resistance you can use: supply and demand zones, order blocks, horizontals, fibs, pivots, and diagonals. Now, I'm going to just briefly go through these. If you're not already a member of our Discord server, we have a paid and free section. You can join the free section, and we have all this free educational information. So I'm going to post a link in the description. Once you join, you're going to scroll down here to support and resistance, and the different forms of support and resistance, which are technical analysis techniques you can use to identify your levels. There's little infographics here that are going to help you remember it and explain it to you. So let's get back to the chart. Now, just for this example, I bring up Amazon on the chart, and I'm going to scroll to the right a bit. And we can see I've got, a key level drawn here, and just wanted to go through with you guys why I actually picked this as a key level. Now, as I said, we've got supply and demand zones. Now, there's four types. We have single candle supply, single candle demand, supply cluster, and demand clusters. Now, a demand zone is where price increases from, and a supply zone is where price decreases in value from. So if we use the replay tool, and let's go back just here, right, on Amazon. I don't trade stocks, but I wanted to use this example because I haven't looked at the chart before. I just literally opened it. I saw this area. I put the zone. And the reason I chose this area is because, we were going up, and then price has absolutely swung the other way. So that's a significant level. And what I've done here is I've drawn what we call a single candle supply zone. So every time price comes back to a single candle supply zone, there's a high probability that it's going to come back down and just keep coming down off this area until we can get above it, and then we come back to it and we flip. It's called a flip, a support and resistance flip off it. So whether you're a long-term investor or a day trader, you want to start on the higher time frame. So we start on the 1 month, and we find these key areas on the chart and we mark them out. And then when price comes back to them, we can look for long-term trading opportunities, or we can zoom in on like the 5 or 10, 15-minute time frame and find quick trading opportunities. So let's press play on the replay, and let's just see, what happens with this key level that we identified. So you can see here, we've come back up to it. We literally just tapped it, and now we've come back down again. And, you're going to see that repeat. I think it repeats one more time on Amazon before the zone is actually claimed, and the price just absolutely skyrockets. Right? So we can see here, this is zone, it was a key level. The price kept selling from it until we finally claimed it and then took it out. So looking at that same chart, let's zoom in to, let's say, the 1 day time frame. Right, so we've got our zone here. And so if you're a trader looking to take profit or, to sell short, if you drew this level, you can just see as clear as day when we come back to it here, it just perfectly touched off it. So it's clearly a key level, and over here, we broke above it, but as soon as we came under it, back down, it's respected the level once again. And you can see over here how we just had this little area, we kind of bounced off it. As soon as that happens, we went straight up. So that's just one form of a key level. And that's a single candle supply zone. So this is Bitcoin. We're going to look at Bitcoin on the 1 month. And, once again, I'm going to look at these key levels, key areas. And, I can see a couple here. One main one I noticed is, we've got a demand cluster here. It's explained on the image on Discord. It's a little area, a kind of a square block that appears on the price before a massive move up. So you can see we've got this kind of rectangle. That's a bad rectangle. We've got this kind of rectangle here, and then the price just shoots up. So this is a demand cluster. It's an area where price increases from. So you can see that we come back down and we touched it perfectly, and then we went up again, from $4,000 to 12,400. So if you're a long-term investor or a day trader, you really want to know these key levels and the key areas so you can find the trading opportunities. So this is only a brief video. If you want to really research it, visit our Discord, but I'm just going to give you a quick run through. So we have demand clusters, which is a small block before an up move, right? We have single candle supply zone, which is before a reversal downwards, just the top of the candle. We have a single candle demand zone. So we can see right here, this massive green candle happened. There was a swing upwards there. So it's a key level. We had this little area, and that is a single candle demand zone. You can see price revisited it and reacted to it here. And, we've also got order blocks. Order blocks are tiny little areas before massive moves. You can see this one little square here before we had this massive move. They're the types of zones. I also missed a supply zone cluster. Let me just find a quick example for you guys. All right, so I can see one as clear as day here. Now, order blocks may actually be supply or demand zones on the smaller time frames. For example, we've got a little block here, and then we've seen the price skyrocketed down. So this is a clear supply cluster. You can see we respected it again here and came down again. So you have to learn these and be able to identify these key levels so you can find the best trading opportunities, because the big traders, the companies, the institutions, these are the kind of things they're using. So they're the zones, they're supply and demand zones, and they're order blocks. Order block on the 1 day time frame might actually be a supply and demand zone on the 4 hour time frame or 1 hour, whatever you're looking at. So they're the zones. Now, other key levels you can use are the Fibonacci. We've got the Fibonacci. We drag it from one swing to the next, and it gives us these mathematical levels. And you can see when price reaches them, it has strong reactions. So they become key levels. We also have the pivots. You go to indicators and pivots, And it's the same thing. Pivots are like a mathematical formula that give you areas in the market that are very important for the price to react to. So they can be key levels. Now, the main thing is when you're on the higher time frames, they're obviously more important. And the type, how big the move is from the area. Like, we can see that Ethereum here had a bit of a down move from here, which is a supply zone cluster, but it's not going to be as strong, in my opinion, as this one here. It's this, this huge move. So this is by far the strongest resistance here, as well as, this area you can see here that we came up from. Once we get over to here, this is going to be a very important area. So you have to look at these charts and, find the important areas where price made really big movements, and, be able to use them to your advantage to find trading opportunities. So I covered zones, I covered Fibonacci, I covered pivots, and the last really other techniques you can use for key levels are diagonals. So you have 3 touches on a level on a diagonal, and you can see 1, 2, 3, and then eventually we come above it and we come off it. So that was a key level. It's the same on the opposite side. We have what we call a diagonal support. You can see the price touches it and it goes up every time it touches it. That's a key level. And we also have the horizontal levels. So it's the same thing as what I just showed you, except, we're using like a horizontal level. So we can see here, price came down, price came down, price came down, price came down. This is a key area. And, you can see here, it's not always perfect, but sometimes it does play perfect, but you have to use other factors as well to consider in your ideas. But you can see here, we came back to it and we came off it. So they're just the different techniques I use to identify key levels. I always start on the 1 month time frame, and I look at, I spend a bit of time and I think to myself, what are the most important areas and what areas are other traders possibly looking at? So I hope you guys enjoyed the quick video. If you're beginning, make sure you visit our Discord and go to the support and resistance section. And it's not completely finished. There's still a few more channels I've got to add during this week. But have a browse through this. It's all free. The link is in the description, and you can start off learning probably the most basic and important form of technical analysis to help you in your trades. So thanks a lot, guys. I hope you enjoyed the video.